Good morning, everybody. Welcome to another Daily Market Report brought to you by MyPL. Today is Tuesday, April 7th. Hope you guys have a great day so far today. We do got a couple items here. One item on the economic data, which is the NFIB Small Business Index for the month of March. This is the optimism or a confidence level for small businesses, which is important primarily because they do make up the largest jobs. And as one would attest, confidence was pretty high at 104.5 in February, and of course March hit. It dropped down to 96.4, which is actually the lowest since I think it was October 2016. Uh, so again, now things soared. Things have been pretty good, and then of course the coronavirus hit, and now things are down a little bit, and we will most likely obviously go into a recession. But personally, I think that this recession probably in more of a V shape. So as quickly as we went down, I think it will be as quickly as we can rebound. And I think we are implementing everything that is necessary to have a quick rebound and probably come back a little bit stronger as a result. So that's my personal feelings on the side. But to continue here, we got the headline news here. Stock market is up so far. It went up pretty good. So we got a couple of days here of growth here. Of course, it's kind of renewed on coronavirus optimism. We had seems like we're having a fewer deaths being reported, which is obviously a very good sign of things coming. So it seems to be there's a little bit of a slowdown, at least on the Europe side. Here we're still, of course, not reaching our peak yet. We haven't reached our peak yet, but there's some progress being made. There's also what's creating a little optimism in the markets is that there's talk of a possible new stimulus program that might be rolled out for May. So this is obviously good news for people as well. So this is kind of reinvigorating investors' moods and kind of getting stocks to rise a bit as a result of it as well. So let's see how this is playing out in the bond market. Bond market is down a little bit so far this morning. It's down about 2 basis points. We were down a lot further. I think we started off about 11 basis points lower. However, we did rise a little bit. Right now we're down about 2 basis points, but which is still good news. We don't want this to get out of hand. The Fed also has been kind of propping up mortgage-backed securities with their purchases on a daily basis. They've been doing just enough to kind of keep it, as you can see here, more in this sideways level here for a while. So this is kind of what we need in terms of helping the lenders get through their cycle of their refinances and purchases to try to get some of these out there so they can get the lines of credit, which have been decreasing as we speak because their value of their assets have been shrinking. So therefore, they go ahead and are able to fund less. So and then on top of it, we have servicers. So the FHFA has been negligent, hasn't been able to help them, and they're kind of doing this wait and see attitude and haven't helped them. So the servicing is also getting kind of slammed a bit here as well. So we need all these components that are kind of bottled up right now to kind of need some assistance to help it through. And meanwhile, lenders are bleeding and servicers are bleeding, and none of this is getting through. So those who are in refinances might be getting a little frustrated trying to get these things through. And I'm hearing from different people that they're having troubles trying to get their loans done, and it seems like a lot of excuses are being done as to why not to do a loan at this point. So you may run into those scenarios. But again, things are drying up. Some of the more jumbo loans have been investors that I've been hearing about have again kind of pulled out of the markets. So we are starting to see more and more of that. We are seeing more overlays on things like for investors. A lot of people will not include due to the forbearance will not include the investment properties rental income to be included as part of their income. If they do, if they will, it's only do because they want to make sure you have at least 6 months of reserves for each property, which is housing payments for each property. Many people may not have that. Also, self-employed borrowers, they're automatically deducting 25% of their income due to the slowdown of the coronavirus. So they're automatically hitting self-employed borrowers as well. So again, a lot of different things are kind of playing out, and they're getting really, really strict about different things. So just be prepared if you guys are looking to buy or refinance. That you may run into obstacles like this if you guys are self-employed or investor looking at those different avenues. All right, so now to move ahead, we got the yields. Yields are up about 75. We're still a little ways from the 25-day moving average. So it's got room to grow a little bit further, actually up to 0.8284, so almost 0.83. We're currently about 0.75 right now, so it could technically rise if it wants. It has plenty of room in either direction. All right, so that's about it. I would say rates are unchanged at this point. It did start off earlier, but again, a lot of lenders don't roll their pricing out until later in the morning. So I would say rates are unchanged. However, again, investors still are not rolling out the better pricing as to where the market would normally be, and that's what we're kind of still running into. We're still running into those issues as right now, as a lot of investors just don't have the liquidity to fund these loans right now due to a lot of the issues that I mentioned previously. All right, so again, if you guys are looking for information or anything I can help you guys out with, if you guys are looking to refinance or buy and you're located in California, please reach out. You can direct message me or email me. My information is in red at the bottom of this page, and the quickest route I do respond to is email. You guys have a great rest of your day. Thanks so much for watching, and I'll catch you in tomorrow's video. Bye-bye.